But I don't think the Standard Chartered estimates are crazy. I think people underestimate the scale of assets that can move on chain in the next handful of years. Again, these DeFi assets, they're tiny. Like Uniswap, again, is a couple $1 billion. If I told you today that Uniswap was $10 billion, you wouldn't be like, that's crazy. You'd be like, oh, that makes sense. Coinbase is what, 60 going to 100 or whatever. It sounds reasonable. It's just anchored at this 2.5-ish valuation. It could double and we could still be having the conversation of it's too cheap. So I think there is a lot of upside in these assets if they execute well.
Standard Chartered's latest projections see Uniswap potentially reaching $100 by 2030, Aave reaching $3,500, and Ethereum continuing toward a radically larger role as trillions of dollars of assets move on-chain. The numbers sound extreme only if you assume today's crypto market is roughly the same market we will have in 2030. But that is precisely the assumption being challenged. Because the real story isn't just about Bitcoin versus altcoins. It's about the possibility that we're still looking at the very first layer of an enormous financial migration. Stablecoins are expanding. Tokenized real-world assets are moving onto blockchains. DeFi protocols are beginning to generate meaningful revenue. And according to Bitwise's Matt Hougan, the market may be dramatically underestimating how much value these networks could capture if that migration continues. What's especially interesting is that his thesis isn't built solely around Standard Chartered's targets. It comes from observing where institutions are actually trying to gain exposure and recognizing that the crypto economy is becoming much larger than Bitcoin alone. In today's video, we'll break down why Hougan thinks DeFi may have years of growth ahead, why revenue could become the next major narrative for altcoins, what could take Ethereum above $8,000 by 2030, and perhaps most importantly, why not every altcoin will win even if the overall crypto economy explodes. If you find this analysis useful, hit the like button, subscribe to the channel, and turn on post notifications so you don't miss our next breakdown. And let me know in the comments, which crypto network do you think will capture the most value from the on-chain economy?
I will say that there's interest in two specific areas of the altcoin side. So the first is anything linked to stablecoins and tokenization. There's a desire to get exposure to the growth of those themes. And if I asked you, John, how do you get exposure to stablecoins and tokenization? You might say Circle, and you might say Securitize, you might say Robinhood, but you also might say Ethereum or Solana or Chainlink or Ondo, etc. So there is that focus, right? They don't know what those assets are. Most financial advisors and professional investors haven't heard of Ondo, but they're looking for Ondo, right? They're wondering what that is. So there's a lot of conversations around that. The other one that's maybe earlier, but I think growing substantially is revenue. There's this desire for crypto that's real. And Hyperliquid is obviously the easiest example of that. But if you look throughout the crypto stack, you see a lot of projects that are dramatically improving their tokenomics. I'm thinking about Uniswap throwing the fee switch and the unification proposal. I'm thinking about Aave and Aavenomics 3.0. I'm thinking about Aptos 10xing fees and then having their on-chain activity 3x. I think there's more pricing power even in the L1 space than many in crypto give them credit for, and certainly in the DeFi app space. So the other place that's just sort of starting to bubble up is show me the assets with real revenue, and I'll find that to be interesting. So I think that's going to be an emergent theme over the next handful of months.
Well, let's talk about the next handful of months, because the last time we spoke, a lot of the projects you just listed are DeFi projects. And the last time we spoke, you said that DeFi had been sort of a sneaky outperformer. Do you think that continues through the rest of the year? Do you think that sector continues to show strength in the digital asset space?
Yeah, absolutely. Those assets are too cheap. Not investment advice, but if you look at something like Uniswap, which is a global brand that has shown the ability to turn on monetization without losing users, it's a $2-3 billion project. You look at on-chain lending, whether it's you take Aave and Morpheus, the leading protocols, combined, they're a couple $2 billion. These are tiny amounts. We sort of almost talk about Uniswap in the same category as Ethereum. It's 100th the size, right? So could those double and still be relatively undervalued? considering their growth and their brand and their reach, and the fact that they're being integrated into things like Robinhood chain and sort of the institutional crypto community. I think absolutely. So look, I think the DeFi trend is probably got years to play out. I think people have overlooked those assets for reasons that are no longer accurate. The idea that they don't generate revenue that benefits token holders, I think that's no longer accurate. The idea that regulation will squish them, I think that's no longer accurate. So I think there's going to be a while people re-underwrite them, where people have an opportunity to maybe find some outperformance in that space.
When we get to that 2030 time point and we have all these trillions of assets on chain, what is the thesis on Ethereum there, and what does that look like to you?
Yeah, actually, there's a lot of questions around Ethereum. So I'm glad that you asked that, because I was asked that in like a one answer, yes or no setting,
right.
Which doesn't.
I'd love to hear you elaborate.
a lot of time to elaborate. Look, the bull case for Ethereum is that the total number of assets on chain is going to 10 or 100x. And Ethereum is the leader on tokenization and stablecoins from a market share perspective. A lot of that is going to move on chain. And then my thesis is it will figure out why that's valuable. I think that the questions on Ethereum, there are two. There's one, can it compete to continue to gather assets on chain? I actually think it will. I think that's a pretty Lindy market where trust and brand and reputation and time in the market matters, and where the Ethereum community is starting to execute well to be competitive with the Solanas and other things of the world. So I think they'll have a reasonable market share. I think the questions that center around Ethereum is how they think that market share translates into value. And the community is focused on sort of Ethereum's monetary asset value. I think that's an interesting idea, but as yet unproven. And I think the question of whether the price goes up is whether that is realized, or whether the view of Ethereum shifts to a revenue-focused view, in which case it needs to make changes to how it operates and its policy in order to justify that higher valuation. I think it's one of the most complex crypto assets to value in the market today, because it is a revenue-generating chain that is organized around accruing a monetary value. And that is a transition or a separation that they need to bridge. I think it's possible to bridge it, but not certain. And so that's the nuance around it. But the broad bull thesis is it's a leader in the market, it's executing well, the community is energized, and the assets in the market it serves are going to 10 or 100x is probably a good bet. That's the level of that analysis that gets us north of that $8,000 figure.
There is a subtle but extremely important shift happening inside this thesis. Institutions aren't necessarily approaching crypto by asking which coin will pump next. They're increasingly asking a much more traditional question: where is the growth going to occur, and which assets provide exposure to it? If stablecoins, tokenized securities, and on-chain financial markets become enormous industries, investors will naturally start looking for the infrastructure sitting underneath them. That puts Ethereum, Solana, Chainlink, Uniswap, Avalanche, and other protocols into a very different investment conversation. Ethereum may be the most important test of this entire thesis. It already sits near the center of stablecoins, tokenization, and decentralized finance, but the enormous question is how that activity ultimately translates into value for Ethereum itself. But there's another side to the story that is just as important for investors. If the on-chain economy really does expand by multiples, that does not mean every blockchain and every token will automatically benefit. In fact, Hougan thinks the opposite. The winners could become dramatically more valuable precisely because many competitors won't survive.
Do you think that we see a situation where we keep seeing that distribution of Bitcoin's the king, then Ethereum, and then all these long tail of assets after that? Or do you think that we're going to see some of these alts start to really grow in market cap, basically?
Yeah. So the nuanced answer there is that the assets that succeed will grow, like Standard Chartered is saying. That's a core belief that I have, because the volume of assets moving on chain is really significant. We've done 0.1% of the assets that are going to move on chain. And so if Chainlink maintains its current position in the market and the asset's 100x, well, guess what? Its revenue is going to 100x at a minimum, probably more. And so the value of the token will go up substantially. The flaw in this analysis, that the reason collectively it doesn't make sense, is they're not all going to win. Look, I don't think the L1 space is going to be a monopoly, but they're probably not 100 valuable L1s, right? So if you ask me to make the bull case on L1 number 9, I can make that bull case. And in that bull case, it will do very well. And that's how you get these optimistic price targets on all these different assets. But will they all do well? They will not all do well. Will there be turnover in the leadership? There will be turnover in the leadership. And what does that mean for an investor? It means that if you want to maximize your return, you're going to pick the one that you are certain will win. And then you probably will get those Standard Chartered 25x returns. For other investors, you may just want to own the field and be satisfied with a handful of X's, even though some will fail and some will succeed. That's more the kind of investor I am. But I don't think the Standard Chartered estimates are crazy. I think people underestimate the scale of assets that can move on chain in the next handful of years. And, again, these DeFi assets, they're tiny. Like Uniswap, again, is a couple $1 billion. If I told you today that Uniswap was $10 billion, you wouldn't be like, that's crazy. You'd be like, oh, that makes sense. Coinbase is what, 60 going to 100 or whatever. It sounds reasonable. It's just anchored at this 2.5-ish valuation. It could double and we could still be having the conversation of it's too cheap. So I think there is a lot of upside in these assets if they execute well.
Standard Chartered initially placed a $100 target on Uniswap based on the expected expansion of DeFi and tokenized assets. But since then, the economics of the protocol have become even more interesting. Uniswap's growing role in new on-chain markets, combined with mechanisms that allow protocol revenue to support Uniswap through buybacks and burns, creates something investors have historically demanded from traditional companies: a clearer connection between economic activity and the asset itself. And that is exactly the kind of development that can force analysts to revisit old valuations. The Robinhood chain development is particularly revealing because it demonstrates how quickly this can happen. When a major financial platform pushes deeper into on-chain markets, the question isn't merely which blockchain gets the transaction volume. The bigger question becomes which protocols collect the fees, provide the liquidity, facilitate the trades, and supply the infrastructure underneath it all. If tokenized stocks, funds, currencies, and other real-world assets eventually reach the scale Standard Chartered expects, today's leading DeFi protocols could be operating inside a financial market that is orders of magnitude larger than the one investors are pricing today. But Hougan's most important warning may actually be the simplest one. The future can be incredibly bullish for crypto, without being bullish for every crypto asset. There may not be 100 dominant Layer 1 networks. There may not be dozens of protocols capable of maintaining leadership. Some projects will lose market share, some will disappear, and others will become vastly more valuable. That means the next phase of crypto could be less about owning everything, and more about identifying the infrastructure that is actually capturing the growth. So the question isn't whether every Standard Chartered prediction will come true down to the dollar. Nobody can know that. The bigger question is whether the underlying transformation they're betting on is real. Trillions of dollars moving on-chain, institutions demanding exposure, stablecoins becoming financial infrastructure, tokenization accelerating, and DeFi protocols finally learning how to capture the revenue they generate. If that transformation is only beginning, then the most interesting part of the crypto market may not be behind us. It may be the repricing that happens when investors finally understand just how large the on-chain economy can become. If you enjoyed this breakdown, like the video, subscribe to the channel, and share this with someone watching the next phase of crypto unfold. Thanks for watching, and I'll see you in the next one.